Welcome to video 3 of your NMLS Safe Exam Prep Series. Today's topic is TRID, the TILA-RESPA Integrated Disclosure Rule. TRID generates some of the most scenario-heavy questions on the entire exam. By the end of this video, you will know the loan estimate, the closing disclosure, all 3 tolerance buckets, and how changed circumstances work. TRID stands for the TILA-RESPA Integrated Disclosure Rule. It became effective October 3, 2015. TRID combined the old good faith estimate and the HUD-1 settlement statement into 2 new standardized forms. The loan estimate replaced the good faith estimate. The closing disclosure replaced the HUD-1. The goal of TRID is to give borrowers clear, comparable cost information early in the mortgage process and ensure those costs are accurate at closing. The 6 application elements are among the most tested TRID facts on the exam. When all 6 elements are present, the lender must issue a loan estimate within 3 business days. The 6 elements are: number 1, borrower's name; number 2, borrower's social security number; number 3, borrower's income; number 4, property address; number 5, estimated property value; number 6, desired loan amount. Critical exam. Trap. Credit score is not one of the 6 application elements. This is the single most frequently tested TRID fact. Once a complete application with all 6 elements is received, the lender has 3 business days to deliver the loan estimate. For LE delivery, business days include all days except Sundays and federal holidays. Saturday counts. The LE must be received by the borrower, not just mailed, within 3 business days. If mailed, add 3 calendar days for presumed delivery. Important rule: the lender cannot collect any fees from the borrower except a credit report fee before the loan estimate has been received. The closing disclosure must be received by the borrower at least 3 business days before consummation, before closing. This 3-day waiting period gives the borrower time to review the final loan terms, compare them to the loan estimate, and identify any changes. The waiting period can only be waived for a bona fide personal financial emergency. 3 events trigger a new 3-day waiting period. First, the APR increases by more than 1/8%. Second, the loan product changes. Third, a prepayment penalty is added. TRID divides fees into 3 tolerance buckets. Bucket 1, 0 tolerance. These fees cannot increase at all from the LE to the CD. They include lender origination charges, points, transfer taxes, and fees for required services where the borrower cannot shop. Bucket 2, 10% aggregate tolerance. These fees can increase by up to 10% of the total of all 10% category fees combined. They include recording fees and fees for required services from the lender's approved list. Bucket 3, unlimited tolerance. These fees can increase without limit. They include prepaid interest, homeowner's insurance, and services the borrower independently shopped for. Let's work through a 10% tolerance calculation. 3 fees are in the 10% category. Recording fees on the LE equal $180, pest inspection $150, title search $200, total on LE $530, maximum allowed increase 10% times 530 equals $53. On the CD, recording fees increased to $225, pest inspection to $165, title search stayed at $200. Total CD $590, actual increase $60. Excess over tolerance, 60 minus 53 equals $7 violation. The lender must cure by refunding $7 within 3 calendar years. A valid changed circumstance allows the lender to issue a revised loan estimate with updated fees. Valid changed circumstances include new information about the borrower not available at application, a borrower requested change to the loan amount or property, a natural disaster affecting the property, a new FEMA flood zone determination, and interest rate lock expiration. What is not a valid changed circumstance? Lender errors in estimating fees on the original LE. Market interest rate movements. Information that was available at application but not collected. The key rule: lender errors are never valid changed circumstances. Let's compare the loan estimate and closing disclosure side by side. The LE is issued within 3 business days of a complete application and replaced the old good faith estimate. It is an estimate, not binding, but it starts the tolerance clock. The CD is issued at least 3 business days before closing and replaced the old HUD-1 settlement statement. The CD reflects the actual final costs. Both documents are governed by Regulation Z under TILA and Regulation X under RESPA. The LE starts a 7 calendar day minimum waiting period before the loan can close. Zero tolerance fees deserve special attention because they generate the most exam questions. Zero tolerance means exactly that, zero. Not $1 of increase is permitted without a valid change circumstance. Zero tolerance applies to lender origination charges including underwriting and processing fees, discount points, transfer taxes, and fees for required third-party services where the borrower cannot shop. Example: if the LE shows an origination fee of $1,200 and the CD shows $1,450 with no change circumstance, the lender must cure by refunding $250 within 3 calendar years. TRID exam traps. Trap 1. Credit score is not one of the 6 application elements. Trap 2. The LE must be received in 3 business days, not just sent. Saturday counts. Sundays and federal holidays do not. Trap 3. Zero tolerance means absolutely zero increase allowed. Trap 4. The 10% tolerance is aggregate. It applies to the total of all 10% category items combined, not to each fee individually. Trap 5. Lender errors are never valid changed circumstances. Trap 6. The cure window for tolerance violations is 3 calendar years from closing. TRID timeline from application to closing. Day 0. Application received with all 6 elements. Days 1 through 3. Loan estimate must be received by the borrower. 7 calendar days minimum must pass between LE delivery and closing. After processing, closing disclosure must be received at least 3 business days before closing. Closing day, loan consummation. Key numbers: 3 business days for LE delivery, 3 business days CD waiting period, 7 calendar days minimum between LE and closing, and 3 calendar years for curing tolerance violations. Key numbers for TRID. Loan estimate delivery, 3 business days from complete application. Closing disclosure delivery, 3 business days before closing. Minimum time between LE and closing, 7 calendar days. Zero tolerance fees, cannot increase at all. Origination charges, points, transfer taxes. 10% aggregate tolerance. Recording fees and lender list services. Cure window, 3 calendar years from closing. New CD waiting period triggered by APR increase over 1/8%, loan product change, or prepayment penalty added. The 6 elements: name, social security number, income, property address, estimated value, and loan amount. Quick recap of TRID. TRID replaced the good faith estimate and HUD-1 with the loan estimate and closing disclosure. The 6 application elements trigger the LE, and credit score is not one of them. LE must be received within 3 business days of a complete application. CD must be received at least 3 business days before closing. Zero tolerance. Origination fees, points, and transfer taxes cannot increase. 10% aggregate tolerance covers recording fees and lender list services. Lender errors are never valid changed circumstances. The cure window for all tolerance violations is 3 calendar years from closing. That is video 3 of your NMLS Safe Exam Prep series. In video 4, we cover ECOA, the Equal Credit Opportunity Act. We will drill the protected classes, adverse action requirements, what counts as illegal discouragement, and the difference between disparate treatment and disparate impact. Watch video 4 next. Keep the momentum going. You are building the knowledge base you need to pass. See you in video 4.